Investing in rental real estate can really be one of the most rewarding financial resource decisions that you make. It offers not only potential cash flow, but significant tax advantages that can enhance your wealth building journey. But for many aspiring investors, the process of buying that first rental property feels overwhelming and confusing. So, where do you start? Right here. What steps are you going to need to take? How do you avoid costly mistakes? In this video, I'm going to walk you through the entire process of buying your first rental property in 2025, breaking it down into 10 clear, actionable steps. So, whether you're a complete beginner or someone who's dabbled in real estate before, I hope this guide is going to help you navigate the complexities and set you up for success. So, stick around to the end or just fast forward, and I'll give you an actionable checklist to get started. Along the way, I'm going to share some practical tips, insider advice, and answers to common questions about real estate investing. Before we get started, do me a favor, don't forget to hit that like and subscribe button and hit the notification bell if you don't want to miss out on any more no BS real estate information. So, step one, prepare for your down payment. Before you even start looking at properties, it's crucial to have your finances in order, specifically a down payment. Most lenders, if you're going through standard banks, are going to require a down payment when financing a rental property, and the amount can vary depending upon the loan type and your credit profile. Typically, a bank is going to ask you to put down at least 20% of the property's purchase price for an investment. If you're a vet, you can use a VA loan, which allows you to put zero down. If you're looking at an FHA loan, you're going to be able to come down to the table with as little as 3.5% down. But both of those routes have a 1-year residency requirement. So start by assessing your savings and figuring out how much money you can actually allocate comfortably towards the down payment without jeopardizing your own financial stability. It's important to avoid draining your emergency funds because unexpected expenses are always going to come up during the investment process. Also, consider other upfront costs like closing fees, inspection costs, potential renovation expenses. Have a well-prepared budget up front, and that's going to save you from a lot of surprises and enable you to move quickly when you find the right property. Step two, work on building your credit. Your credit score is going to play a huge role in the mortgage approval process and interest rate that you're going to qualify for. Lenders use your credit to assess risk, so the better your credit, the more favorable your loan terms are going to be. If your credit score is less than ideal, it's worth taking the time to improve it before applying for any kind of mortgage. This can include paying down debts, making your payments on time, and disputing any inaccuracies on your credit report. Improving your credit can lead to lower interest rates, which is going to directly impact your cash flow and your overall profitability on your rental property. For those who have bad credit or limited credit history, there are alternative financing solutions available like hard money lenders. Now, these options come with higher interest rates and sometimes less favorable terms, but they can definitely be a viable path in getting started in real estate investing while you're working on rebuilding your credit. And with a private money lender, everything is negotiable. All right, step three, go out and speak to lenders. Once your down payment funds are ready and your credit is in decent shape, it's time to talk to some lenders, reach out to multiple mortgage lenders and brokers to understand the different loan products that are going to be available to you. Each lender might offer different terms, rates, and fees. So make sure you shop around because it can save you thousands of dollars over the life of your loan. During these conversations, ask about interest rates, annual percentage rates, that's APRs, loan terms, 15-year versus 30-year, down payment requirements, prepayment penalties, closing costs and fees, qualification criteria, and the documentation that you're going to need. Understand all those details because up front, it's going to help you set realistic expectations and prepare you for the pre-approval process. And don't forget about special programs like USDA loans, which are 100%. Step four is choose what type of property you want to buy. Real estate investing is not just one size fits all. Before diving into the market, make sure you know what kind of rental property aligns with your investment goals and your budget. Common types include single family homes, which is easier to manage and typically attract long-term tenants like small families. Multifamily properties, duplexes, triplexes, or quads can generate more rental income but might require some more management. Condos and townhomes have a lower upfront cost usually, but it usually comes with a homeowners association with a bunch of fees and rules. If you're looking for short-term rentals, properties rented on platforms like Airbnb, which might offer higher income but require more active management. Consider factors like location, tenant demographics, your management capabilities and capacity, and your overall risk tolerance. For example, if you're new to real estate investing, a single-family home in a stable neighborhood might be a great place to start. But remember, if you have one vacancy, you are 100% vacant. All right, step five, conduct initial property research. With a clear idea of the type of property you want to start researching neighborhoods and specific properties. This step is important because the location is going to impact the property value, the rental demand, and your potential for appreciation. Look for areas with strong job markets, good schools, low crime rates, and great amenities like shopping and transportation. Use some online tools and local resources to analyze rental rates, vacancy rates, and market trends. When you're evaluating individual properties, consider factors like the price relative to market value, the condition of the property, potential repair or renovation costs, projected rental income, and cash flow. Property taxes and insurance costs are important too, so don't rush this step. Thorough research is going to help you avoid buying a property with hidden problems. Step 6, you're going to get pre-approved by a lender. After you've done your research and before making an offer, get that pre-approval for a mortgage. A pre-approval letter is going to show the lender that from a lender is going to show the sellers that you're a serious buyer with the financial capability to complete the purchase. To get pre-approved, you're going to need to provide documentation like pay stubs, tax returns, bank statements, information about your debts and your assets. The lender is going to take all that information and evaluate your credit trustworthiness and determine how much they're willing to lend you. Having a pre-approval in your hands gives you the competitive advantage in the market and helps you focus your property search within your budget limits. Step 7. We've already talked to our lenders. We've already found our market. Now we're going to select a property and make that offer. Once you've identified that property that's going to fit your criteria and your budget, it's time to make that offer. This is where working with a knowledgeable real estate agent or a really good wholesaler becomes invaluable. A great agent understands the local market, knows where the best deals are, and can guide you through the negotiation process. Whether you're making your first offer, you're going to want to make sure that you include contingencies like your inspection contingency, which allows you to back out or negotiate if significant issues are found during the inspection. You may want a financing contingency, which is going to make sure that your offer is dependent upon securing financing. You're going to want an appraisal contingency, which is going to protect you if the property doesn't appraise for the purchase price. Contingencies are going to protect your interests and give you the leverage to negotiate repairs or price reductions if some problems arise. And guess what? They do. Step 8, complete inspections. It's worth it to pay the $300 to a property inspector. After your offer is accepted and the contract is signed, conduct a thorough inspection. This step cannot be overstated. Inspections reveal hidden issues like water damage, foundation cracks, roofing problems that could cost a fortune to repair. Spend the money. Hire a professional inspector to look at the property's structural integrity. These are the big 6 items that I look for in every rental property: roof, windows, foundation, plumbing and electrical systems, HVAC or mechanicals, and then pest infestations. Watch out for those termites or mice. Once you have the inspections report, calculate the cost of necessary repairs, you can then negotiate with the seller to lower the price by the estimated repair amount. A lot of sellers will prefer to reduce the price rather than risk the deal falling through if you're already under contract. If the seller refuses to negotiate and the inspection uncovers significant issues, guys, walk away. Some of the best deals I've ever made were the ones I didn't make. Go find another property. It's better to lose the deal than inherit a money pit, which is a great movie, by the way. Step 9, close on the property. Closing escrow is the final step where ownership of the property really transfers to you, and it's official, right? This process involves a lot of paperwork and coordination between you, the lender, the seller, escrow agents, title, all that kind of stuff. Be prepared to sign your life away. There are a lot of documents, including the property deed, the loan agreements, the transfer paperwork. You're also going to need to have your funds ready to pay the down payment, your closing costs, and any other fees that somebody's going to pull out of their butt to figure out how much they want to make from you. Closing costs can include lender fees, attorney fees, title insurance, and escrow fees. And if attorneys are involved, it's probably going to go up. Once the closing process is complete, the property is all yours. Now you can start any planned renovations that you have and prepare to rent it out. Now, beginning your journey as a landlord and real estate investor is a long road, and this is going to be a marathon, not a sprint. Step 10. Guys, I cannot stress this enough. Even if it's not me, find a mentor if you're stuck. This is a bit self-serving because I do help vets and first responders invest in real estate, but I had a mentor when I first started and it did well for me. I have a mentor now. I belong to groups who push me and call me out on my bullshit if I don't follow through. All right, here's a bonus. Work with a CPA to understand your tax benefits from your rental properties. One of the major advantages of owning rental properties is the tax benefit. Rental properties allow you to deduct expenses like mortgage interest, property taxes, insurance, any maintenance that you've done, and you can depreciate the asset over time. These deductions are going to significantly reduce your taxable income and increase your cash flow. For example, depreciation lets you deduct the cost of the property, not including the land, over a set number of years, even if the property is appreciating in market value. This creates a very powerful tax shelter that can offset rental income and other passive income streams. If you want to dive deeper into these tax strategies, consider consulting with a tax professional who specializes in real estate investing. Proper tax planning is going to maximize your returns and help you keep more of the money that your rental property generates. Now, I cannot stress this enough. Should you need any help, this is not a sales pitch. Go to budevans.com and book a strategy session. If you are a first responder or you are a veteran, reach out to me, book a strategy session. It is no obligation, not a sales pitch, and I promise I will help you put together a map that will help you go forward in your rental property. First, I'm going to go over some of the questions I'm usually asked, and then I'm going to get to the checklist. First is, Bud, how do you buy property with bad credit? And it happens, right? In this business, you're going to go from 800 to 720 to 600. Common question from aspiring investors is, how do you buy that rental property if you have bad credit? The truth is, traditional banks are often reluctant to approve loans for borrowers with poor credit scores or inconsistent financial history. But there are alternative financing options. First, hard money lenders. These lenders are going to provide short-term loans based primarily on the property's value rather than your credit. They're going to tend to charge higher interest rates and fees, but they can be a lifeline if you need quick funding. Next, we've talked about this before, but let's go into it. Private money lenders. These are individuals or groups who lend money based on personal relationships or the strength of the investment opportunity. Terms vary a lot and anything can be negotiated. Okay, cash purchase. If you have the funds available, buying a property outright with cash eliminates the need for financing and speeds up your buying process. The only thing that's going to hold you back is title. But keep in mind that while these options exist, improving your credit over time is really going to help you open doors, and it's going to allow you to access better loan terms. And if you're serious about real estate investing, prioritizing credit repair is a smart move. How do I build a real estate team? Okay, this is why a great real estate agent is going to matter here. Finding the right real estate agent is like finding a good tax accountant. You want someone reliable, knowledgeable, and invested in your success. A skilled agent, they say investor friendly, they're probably not. But a skilled agent is going to help you identify properties that fit your budget and goals, and they're going to guide you through the complicated negotiations. They're going to provide you with valuable insight about local market trends. They're going to assist you with buy down rates and financing options, and then they're going to support you through all this mess, the inspections, your contingencies, and your closing. You can find a great agent by going online and finding reviews or asking for referrals from people in your area. That's a good one. You can attend local RIAs and real estate meetups. Think of it like dating. You're going to need to try a few before finding the right one. But once you do, this is a relationship that can serve you both for many deals to come, making your investment journey smooth and more profitable for the both of you. All right, here's some final thoughts. Your path to real estate starts now. You have to take action. Buying your first rental property in 2025 is an achievable goal if you follow a clear, methodical process. From preparing your down payment and building your credit to making a smart offer and closing the deal, each step is going to build on the last to set you up for long-term success. Remember, real estate investing is a journey, not a sprint. Take your time, do your research, build your team, and learn along the way. The cash flow and tax benefits you're going to gain from rental properties can transfer your life, your financial future, and provide you with the passive income and wealth building opportunities you look for decades. If you're ready to take action, start by assessing your finances, improving your credit, and reaching out to lenders and real estate professionals. The sooner you start, the sooner you can reap the rewards of rental property ownership. All right, all that being said, here is the checklist I promised you from the beginning. Number one, figure out what your down payment is going to be. Save at least 20% or explore VA or FHA options if you're house hack eligible. Budget for inspections, repairs, and closing costs. Next, try to improve your credit score. It's not going to happen immediately, but you can start by paying down debt. You can dispute errors with the credit companies. You can avoid new credit pulls. Oh God, I had 30 in like a quarter last year. You can shop around for lenders, compare interest rates, fees, and terms. Understand the pre-approval process and all your requirements. Next, we're going to decide what type of rental property fits you. What is your buy box? Are you looking at single family, small multifamily, residential multifamily, large multifamily, short-term, mid-term? Next, we're going to research markets and neighborhoods. We're looking for job growth. We're looking for rent rates. We're looking for appreciation potential. You want to evaluate the property condition and the cash flow on each property. Next, you're going to go out and you're going to get yourself pre-approved. Get your tax returns ready. Make sure your pay stubs and bank statements all in one place so that you can give them to a lender. You're going to want to secure that pre-approval letter before you submit your offers. Next, we're going to look for making offers with contingencies if they accept inspection, financing, and appraisal protections. You definitely want to partner with a real estate agent who works with investors. Cannot stress that one enough. Next, we're going to schedule those inspections and we're going to evaluate Bud's Big Sick: roof, windows, foundation, plumbing and electrical, HVAC, and look for pests. Don't be afraid to renegotiate, and if renegotiation is not available, walk away if the numbers don't work. Next, we close the deal and we prepare for ownership. We're going to finalize those funds. We're going to make sure we review all of our documents and then get ready to begin your landlord journey. Next, if you're having trouble, consult a mentor. They will help you maximize your returns, They're going to structure you for a long-term success. And last, don't forget to talk to a tax professional. You're going to maximize your tax deductions and your benefits using a qualified CPA. They will help you structure your entity properly. For personalized guidance or explore how real estate investing works, consider a mentor. If you're a veteran or first responder, go to budevans.com and book a call, and I will help you get started for free. Proper planning can make all the difference in maximizing your returns and minimizing your risk. So now it's your turn. Time to turn your real estate dreams into reality. So take the first step today, start building your rental property portfolio, and I wish you a prosperous 2025 and beyond. And until the next video, aim high.